Hello, this is Tom Pizzuti with Trading on the Mark. Hope you are doing well. Today, I'm going to take a look at the British pound via the ETF FXB. Now, in front of you, you'll see a monthly chart of FXB. During the financial crisis, certainly had a steep drop off, and after a drop like that, you would certainly think that there would be a corrective formation. Originally thought this was a triangle, certainly looked like it at the time, had a small break of the triangle, but ended up recovering. Now, after about this point right here, thought that, well, it's not looking like a wave two, so therefore it's going to be a larger correction. Will probably go out at the top of the prior, what looked like a triangle. Then look to short again somewhere after this break, again, assuming that this is going to turn into some kind of corrective formation. Pushing out the bottom of that corrective formation, we'd expect to get at least 3 waves, if not 5. So then started counting this out, thinking of that every little consolidation is probably an opportunity to sell. So one clean impulse down, small corrective bounce, and then another series moving down into where we are right now. So the question is this could technically be an ABC down into this low, but for now going to assume that it is a third wave, not a C, and that would imply another corrective move, fourth here, and then a new low. And part of this is driven by the analysis that's not shown, but that's in the US dollar, the dollar index. We're certainly thinking that it is moving into a fourth wave type correction right now before moving on to a new high. And we think that that will end up taking the British pound to an eventual new low, either late this year, maybe early next year. Here I've added a shift channel, and in the shift channel we've touched the median in the channel, pushed past it just a little bit. This is a major move based off of the wave one and down into here. This is a Fibonacci measurement, and that has been holding. Then we're looking at some kind of bounce. Now I have added 2 different retracement levels here. This top one is a 382, a 38% retracement of wave 2 to wave 3 here. So this movement right here, this is a 38% retracement, and that's a pretty typical bounce for a wave 4. Need not go that high. Wave 4s can be very complicated. Here I've illustrated what would look like a triangle if it just corrected in time instead of correcting in price. We could go all the way technically as far up as the wave 1 before it's invalidated, though I find that it's much better that if it ever were to push above this 382, it's best to think that something might be going wrong and that it's not a fourth wave at that point. Now let's move on and take a look at a weekly chart, drill down into this a little bit more. The same FXB, but on a weekly basis, and also have an indicator on here. This is the adaptive CCI, and drawn the channel a little bit differently. We'll see that I have highlighted this is where wave 4 would be the absolute limit for wave 4 would be the bottom of wave 1, but don't think it's going to get anywhere near that high. It's much more likely that this bounce is going to be either a triangle or some kind of complex WXY or something that probably is limited by the bottom of the base channel. This is a 2 times channel extension, and this is the bottom of the base channel. So we'd think that either the base channel or maybe this harmonic of the base channel is much more likely to provide resistance for any kind of bounce. It's also underneath the prior smaller degree fourth wave. From there, would look to have some kind of push down, and any new low would be good enough. But if we were to go ahead and move lower into the end of 2017, it would end up making contact with the channel near 110. So that's what we're looking at out in the future. For now, think about a bounce for the next probably 2 or 3 months at the minimum, maybe as far out as July before seeing any kind of next move, next impulse out of the corrective move. Hope you find that informative. If you like these kind of things, certainly like and subscribe. That gives us some positive feedback and pushes us on to do more. Trade well.